Welcome to The Investor, a podcast where I, Joel Palafinkel, your host, dives deep into the minds of the world's most influential institutional investors. In each episode, we sit down with an investor to hear about their journeys and how global markets are driving capital allocation. So join us on this journey as we explore these insights. All right. So we are live here today with a good friend of mine, Serhat Cicekoglu at Sente Ventures. I'm excited to have you on, Serhat. I really enjoyed our conversation a couple weeks ago and really excited to have you come on today.
Thanks for having me, Joel. I appreciate the kind words. I'm delighted to be here.
Yeah, well, let's just jump right into it, Serhat. So why don't you give us an overview on your career and, walk us through just reflecting on your early education, maybe your early ambitions. What did you think you wanted to do growing up, and how did that translate into maybe your first couple roles? And then we'll kind of do some more storytelling and talk about how you ended up building Sente, and then we'll go deeper on that and then just kind of higher level trends on what we're seeing in the market.
Awesome. Thank you. That's something that I can talk a long time, but I'll try to do my best to make it brief. So, I'm an engineer by education, and I am a lucky one because I am able to practice my engineering education every day till this day. But I started um, coding when I was young, um, just because I wanted the computer system that my parents bought me didn't have the game that I loved. I was 16
Sure.
and I had to have that game. And I
Mhm.
was humbled by how big of a deal to write a code for a game, in early 1990s. And that humbling experience led to my focus in my college education and started making some money while I was at college coding an inventory management software for a cable manufacturer. That
Mhm.
led to a career with a manufacturer, and with that manufacturer, I think I got the opportunity that led to things that I do today. I was a engineer in the factory working. Um, on a project at that young age, what we call today an industrial IoT project that we would
Mhm.
typically name it,
Sure.
automating the data collection and reporting of manufacturing activities on the floor while using barcode readers from a company called Intermec back then. I think they were bought by Zebra Technologies years later. That was a fascinating and a very cutting edge experience.
Mhm.
Three of us, three engineers working on that, and we did something pretty much first of a kind in the industry back then. Fast forward, I was recruited by SAP. Then KPMG recruited me to move to US in 1998 to Chicago office. After about 8 years of consulting, I went back to the other side of the table again and started working in the semiconductor industry. And during that tenure, I found myself in the venture capital team in 2009, and that started the VC journey. In 2012, I decided to focus on hypotheses. Um, what I thought back then was there are many good engineering ecosystems with a lot of entrepreneurs in those ecosystems working on startups, developing new solutions to industrial problems. But they didn't have big markets. The biggest market back then, still today, is US market. And what if we invest in those startups at that such an early stage and have a favorable valuation for a VC investment, and then commercialize them in US and have them grow in US, and if they're successful, that would create a higher valuation based on US market
Mhm. Sure.
dynamics, therefore create a valuation arbitrage if you are an early investor. Around that hypothesis, I ran an accelerator for startups around 6 countries till about
Mhm.
2017. And at that time, one of my good friends from University of Chicago, where I did my MBA, joined me. And since then, we've been investing in early stage, primarily deep tech startups around the world. We made 56 investments across 24 countries. That's one of our, key things since the beginning of our investment journey. That we want to do this global. We want to work with entrepreneurs from all around the world and help them commercialize their solutions around the world as quickly as possible. Our focus in deep tech, though, taught us a lesson, a humbling lesson, which was basically that they face an extraordinarily difficult second value of that around their BC rounds, which usually is because of the fact that they would need a first of a kind factory, and wasn't enough vehicles. There still isn't enough vehicles to fund the factory because they're still a startup.
Mhm.
Banks or PEs wouldn't finance them typically, and venture debt is very expensive, as you notice as well. High principal payments, a heavy interest burden, which leaves it with the family offices. But the family offices also don't want to, finance $1 billion factory by themselves. So what do you
Sure.
do? And I'm looking at my portfolio starting to face this challenge, and like they're going to die if there isn't a solution.
Hmm.
About 2 years ago, I started working on an idea, and the idea was to create a debt vehicle that's favorable to the entrepreneurs and marry that with an equity investment that's much lower than the entire capital stack that's needed through family offices and reduce their risk by commercializing solution in 2 years with a cheap debt vehicle. That idea became a reality the beginning of this year, and now we opportunistically continue to do early stage deep tech investment, but our focus is now financing advanced manufacturing, first of a kind factories for deep tech solutions to commercialize
Yeah.
them. That's our focus, and that's sort
Sure.
of like a short story where things
That's
started
a
and
couple
how
of
it
things.
evolved.
Yeah. So I would say the platform that you're building is very impressive, and I'm seeing a lot of fund managers have hybrid strategies. So
Mhm,
there was a group on maybe about a month ago called Upper 90. They're a hybrid fund, right? So they do private
mhm.
credit. I think they also do
Yeah,
growth equity as well.
right.
And it makes sense because especially now in this market, people are looking for a little more certainty with some of these
Yeah.
investments. So if you have a debt vehicle, and we've had fund managers that have gone through our past fund accelerator program
Mhm,
that have done some really creative things as well. So there was one fund based out of Brooklyn. What they do is they will offer debt capital. The fund is
mhm,
a private credit fund, but then they also get the upside from the venture returns by offering warrants. So
mhm.
that was really interesting. Where you get to pretty
Yeah.
much double dip. You get the benefits of getting upside ownership in the company, but you also get some stable returns from a debt vehicle in the form of a note, right? In the form of a debt servicing facility where you can distribute interest to your LPs. But you can get that as recurring, annual revenue that's predictable because it's fixed terms, right? In terms of the interest. So that just wanted to comment on that. I think that's a really interesting strategy. Couple questions that I have for you.
Sure.
One thing I'll say is, you and I bonded as engineers, right?
Mhm.
I'm an electrical engineer. What do you think are some of the traits that engineers have that make them good investors?
Oh, oh, I don't want to sound arrogant, and certainly not my intent, but I think the pedigree as an engineer that you receive or develop over time is the way that you look at the problems are not, uh, are maybe more focused on solution,
Hmm.
and with the intent to develop a solution to a problem that you're looking at, um, and actually pulling up your sleeves and actually do it versus just writing a check. We have which is not what I mean that VCs do. So I want to make sure that I'm not misunderstood. I don't mean that what
Sure.
VCs do is just writing a check. Uh, but I think as an engineer, you look at the technical technology, the underlying technology, the background of the team, the different blends.
Hmm.
Um, And then obviously, as an engineer, I don't know every engineering, a vertical, but being able to talk to other engineers in your
Hmm.
network helps great deal to assess the viability of the team's capability, their reputation. Also understand, their past work, as well as what they're embarking on as the new venture, and actually doability. The ability to bring that technology to manufacturing scale is really the crux, or maybe the black box of what we're
Hmm.
focused on. Because in the engineering world, there are two separate worlds of engineering. One is that the R and D and the design
Hmm.
side of the house, and then the other side is the manufacturing and
Yeah.
serviceability side, right? Just because something that works in the lab doesn't mean that it's actually easy or profitable to manufacture it at a scale to bring that commercial solution to masses. One thing that may be unique to us is that we try to focus on things that could be available at abundance to mass population.
Hmm.
Uh, it's not a B2C focus. What I'm trying to say is that we're hoping that we're backing technologies that could become affordable to masses and improve the lives of masses around the world. And part of the reason why this is important is that implies also building multiple factories around the world and distribute the technology around the world as quickly as possible. And that's what that's another unique part of our financing. So we want to make sure that the factory is not just in one location. Some technologies require that just because of the network that they have to tap on, but most of the advanced technologies could be deployed. But that bridge between design or the R&D, or and then how it transitions to manufacturing, is where I think engineering pedigree helps a little bit,
Yeah.
or creates an advantage in my mind, particularly relevant to this subject. Again, I don't want to sound like it's just engineers who can
Hmm.
see that, but it probably does make a difference in terms of how we
Sure.
think about things.
I totally agree, especially when you're diligent into those deals, bonding with a highly technical team and, having them know that you have a technical background is a common ground that you can
Mhm.
bond with people. I mean, I've invested in defense tech and aviation, and the fact that I, was doing work with the DoD, definitely helped me form some initial common ground, because a lot of these deals you cannot obviously get into because they're oversubscribed. So I think just having some way to bond with the founders and have something that you can add value to definitely helps.
I
Um,
agree. I agree. I think part of the issue is that when you think about the typical debt vehicles,
mhm.
they're heavy on the principal payments. They're heavy on the interest. They're not entrepreneur friendly. They are
Yeah.
investor friendly.
Hmm.
So part of the thought process that you have to have is to your point, creating that bond, but
Yeah.
also um, build on that bond to structure a finance or capital stack that doesn't upset the investors, that doesn't upset the
Sure.
entrepreneurs, and brings the solution to market at scale. I think that
Hmm.
is important moving forward for particularly deep tech sectors that you've been mentioning earlier, like such as defense, energy, agriculture, to mention a few.
Sure. I mean, one fundamental thinking workflow that or I would say mental model that I've adopted just by being an engineer is like looking at everything as a system, and then there's like subsystems,
Yeah,
right? So if you're looking at
right.
like a propulsion system, right?
Yeah.
Underneath that, there's two or three different
Right.
pieces that break down into multiple systems. And we had to, when we had to write requirements, we had to use this software. I think it was called Doors, and in Doors you have like that's how they map out the requirements, right? So it's like the system level and it breaks down. So I think
Yeah.
systematic thinking has been something that I've kind of used. I try to break down things into simpler pieces and then just tackle them one by one at the layers. So that's just something I've noticed. I don't know if you've noticed kind of that mental model being an engineer as well.
I'm an industrial engineer, so that's exactly what they teach at school, right? So, but I think the value in that breaking apart is, and I think VC pedigree is really great in that
Hmm.
regard, right?
Sure.
Breaking apart the business model, infamous, business model canvas, all that helps us
Hmm.
breaking apart the business model. But you're right, you have to break apart the solution into pieces as well and
Hmm.
understand, does the team have the skill set and the pedigree and resources or a network to actually solve all those problems? Because money is not a solution to every technical problem or every
Hmm.
engineering issue. I don't have to give examples. History is filled with those,
Sure.
those examples. But I think understanding where the risks are from an engineering perspective is very important. Now, uh, they all can be solvable. Understanding
Hmm.
the plans to mitigate them, understanding how the team is planning to solve them is important part of the conversation, and having realistic assumptions around those mitigation plans makes us more comfortable about the investment that we're making. At the end of the day, we're making a risk investment, right?
Hmm.
Venture is risk capital, doesn't matter what stage you're at. There is no guarantee for a return. We all have our own hard lessons about that fact. But taking calculated risks requires an understanding of these parts of the system, as you were very eloquently referring to.
Yeah. I posted a article. It was kind of going a little viral a couple weeks ago. It was just one of the researchers at Carta, Peter Walker. He
Yeah,
wrote a whole article on just the case for spray and pray, right? So you were kind of
right, right. I
mentioning
remember
that
that. Yeah,
earlier,
yeah,
right? So I
yeah.
mean, so should VC spray and pray? So there's a whole concept. Obviously, you're sourcing and screening
Right.
your try, and it also depends. I think the main thing, and I just shared some of the key pieces of data that they had, but there's usually high conviction where you got
Hmm.
20 portfolio companies. I will say when I've seen high conviction, some of the companies, the portfolio construction is like 12 companies. So
Hmm.
they're lead only funds. So I think there's like super high conviction, which is like maybe 12 to 13, maybe
Hmm.
14 investments. And it's like super
Hmm.
concentrated, high ownership, high conviction, usually leading or co-leading.
Yeah.
In that sense, you're not really spraying and praying because you don't have enough capital, and your portfolio
Hmm.
construction only drives you to make a certain amount of investments, and you're going to be deploying in maybe 2 to 3 years. And then there's typically the 20 or more, and then the diversified, which is like 100, right? So the 100, I
Right.
would say, is almost like a mega fund. But what's your reaction to that
Mm.
post, especially based on what you were saying? Just kind of really thoughtfully investing in it. And I know in deep tech, the way you're looking at companies, there needs to be obviously most of these businesses are capital intensive, right?
Right.
So if you're building a rocket company, you need to be able to raise tons and tons of capital to
Right.
be able to mitigate the risk of failure and the capital intensivity. But then there also needs to just be a high tech barrier. The barrier needs to be high enough that your competitors can't really compete with you on the technological innovation. So just want to hear just kind of an
Yeah.
open-ended reaction
Okay.
to this post, and then just kind of in general, how are you sourcing and screening, especially internationally, deep tech type of investments.
So there are multiple parts in there. So if we start with this, strategy, the investment hypothesis, or the conviction, the level or the type of conviction that you have, I think, I it's not my place to say one or the other is better than the other. It's just whoever has a strategy, they need to understand the merits of that strategy deep, and I believe
Mm-hmm.
every VC attempts to do that and pursues that strategy. Um, Mine has been, as I said, a bit of a humbling experience because we started spraying the bats, but learned early on early enough, I guess, to say that the deep tech has a second value of that, which we didn't see
Hmm.
at the beginning. We didn't
Sure.
understand it that at the beginning, to be honest. And this is why we started working on the debt vehicle to support, deep tech companies at that factory stage. Um, but with that said, I think it's extremely important to understand what your conviction is about, or what you're focused on, and what drives your conviction, and stick to that. Sticking
Hmm.
to strategy uh, will deliver the value at the end of the time horizon that you're focused on.
Sure.
I think um, from a conviction perspective, the process that we follow is we do a deep dive into the industries. There are three industries that we focus on: energy transition, human
Mhm.
essentials, which is agriculture and water, and the other one is industrial circular economy, where we focus on data centers and upcycling and logistics primarily. We have a deep analysis of those industries to first educate ourselves,
Hmm.
to figure out what we don't know and what the problems are and what potential transformative solutions can be delivered. We develop our hypotheses, and we try to refresh it every other year or so. It's not an exercise that
Hmm.
we can do it like a McKinsey would do every 6 months. Like
Yeah.
we don't do that, but we
Hmm.
do have a deep understanding, and we that drives our investment activities, including scouting, including due diligence, all those mainstream activities.
Yeah.
And when you start seeing the opportunity areas, you narrow your focus as well. For
Hmm.
example, in energy transition, we primarily focus on energy storage value
Sure.
chain, but it does also mean that we can finance where it touches, like grid
Hmm.
level storage projects or
Yeah.
data center projects that requires battery,
Hmm.
which drives demand for our portfolio companies, right?
Sure.
So there is that kind of soft expansion without
Hmm.
really leaving your primary hypotheses. It's a little bit of flexing your muscle as you go through, where the markets actually, like sometimes the technology stack gets crowded.
Yeah.
You may have 5,700 marketplaces, but would you invest in another marketplace? Maybe, maybe not. But
Sure.
what that marketplace enables may be an opportunity for you to invest in agriculture technologies that
Hmm.
could be faster disseminated across the farming world, right? So I think things are dynamic. You start with a conviction hypotheses, but you adjust as much as your hypothesis allows you to do so, as much as your fund structure allows you to do so, and the size allows you to do so. You made
Hmm.
a point about having 100 plus investments, right? Well, some funds are designed to do that. They have staff, operating partners, to manage that large portfolio.
Sure.
Some outsource that work to a software platform. I've been
Hmm.
working with some of those funds in the past as well, and sometimes it works, sometimes it doesn't work. So no method is in my mind better than the other. It's all about execution. Can you
Yeah.
execute on that conviction and hypotheses in the manner that you set out, and make the adjustments along the way that makes it a success in the long run? One other thing that you asked about is the scouting. When we started earlier in 2012, 13, all the way up to 2020, 21, we spent a lot of time scouting,
Hmm.
used our network. I had a very strong network, so did my partner, Jared. Um,
Sure.
and we did tap into our network tools that were emerging,
Hmm.
accelerators, demo days, incubators. But I think our style of working with the entrepreneurs over time gave us an advantage, which was referrals from them.
Hmm.
That started to become our key um, sourcing channel. And our LPs, or family offices that we syndicated deals with, became our primary source. So these days, we don't go out and scout as much. I want to
Sure.
say not at all, actually,
Yeah. You
because
get mostly a lot of inbound, I'm assuming, as well.
correct.
Yeah.
Correct. And so it's more like, okay, can we quickly tell the entrepreneur whether there's a fit or not without
Hmm.
setting any wrong expectations, high expectations unnecessarily. That's what we focus on. We try to improve our process of early stage due diligence, like early
Hmm.
filtering, deep, quick, transparent, and efficient by working with the entrepreneurs. That's one of our key things, and
Sure.
give them a decision as quickly as possible so it doesn't
Hmm.
linger.
Sure.
And that's sort of how our process evolved over the decade that we've been
Hmm.
working together with Jared.
Got it. And then can you talk through the secondary, tertiary processes
Yeah.
around screening, right? So what are some,
Okay.
and this is part of this is advice for emerging managers, how have you seen the process work for you in terms of like taking a deal from sourcing and screening? You obviously you don't have to do any scouting, but the diligence that it takes to take it to investment committee and then finally make the decision. Do you have multiple partner meetings? And then, from that stage, does it just go straight to IC? Maybe just some advice on maybe what's worked, what hasn't worked, and
Okay.
because a lot of times through these really great deals, there's a whole timeline where the round's about to close, right? So you want to take your
Yeah.
time and do the diligence, but you don't want to take 3 months diligencing a deal and then the round is closed, right? So
Right.
how do you
Right.
balance the time
Okay.
sensitivity with also just trying to be thorough in your diligence before you make such a big investment?
Okay. I'll start with the last part.
Hmm.
Um, I don't do due diligence based on the deadline that the
Hmm.
round has.
Sure.
If I catch it, I catch it. If I don't
Hmm.
catch it, there's going to be another deal.
Hmm.
But my priority is to do my best to finish the due diligence that
Hmm.
I can stand behind. Um,
Sure.
uh, I think, one of my professors at University of Chicago, Scott Meadow,
Hmm.
who is a celebrated scholar on this and a practitioner in the field as well. That's my lesson from him. That,
Hmm.
like, you got to do the right analyses, due diligence, and you have to have a deal that you can stand behind and defend for for your co-investors, your LPs, etc.
Sure.
Um, so my biggest mistakes, and I don't mean startups that I invested that failed. I don't consider them as mistakes. It happens. Some things don't
Hmm.
work. But my biggest mistake has been betting on the wrong people, and not because of their lack of talent per
Hmm.
se, or um, or what they're taking on being difficult to deliver. It's the characters that I misjudged the characters,
Sure.
and my when I am meeting teams, that's my biggest focus.
Hmm.
Are these characters that I want to be associate myself with, work with, develop a relationship with, um, and how transparent and honest they will be with me in the
Hmm.
good times and the bad times.
Yeah.
I want to give them that confidence, that comfort, so that they can talk to me when things are not so well. And I don't want them to forget about me when things are so well. And that's my focus. That's what I try to establish. I want to be there when they need my help, and I don't want to sound like I can help every time, every instance, but I
Hmm.
want to be there. I want them to reach out to me comfortably and be honest with me. But at the same time, when things go really, really well, I don't want to be ignored or treated badly, and that's relationship building. That's my really primary focus. Numbers, technology, that is relatively easy to understand and
Hmm.
figure out whether that's the deal that you want to be involved in.
Sure.
Sometimes great deals, great opportunities will pass. And we did pass. We're learning how to get better on this, to be honest.
Hmm.
We did pass. They become success stories, but I did not want to be part of those stories because of the characters.
Sure. So we're having a summit in a couple weeks. The whole theme is hyper growth leadership. So what we're talking about is how do you get from 0 to 10 million,
Mm,
and that takes a certain type of leadership. So
yeah.
with these founders that you're investing in, what are some of the traits in your opinion, that make good leaders? You know, how are they building the culture? How are they building teams to take companies to that next level? Right. I mean, there's a seed to Series A companies, and then obviously you got growth equity. You know, so that's a different type of beast,
Right.
different type of problems that you're dealing with, different type of growth metrics that you're judged upon, and then obviously the
Yeah.
investors have different expectations. So when you're getting to that stage, right, the 10 million plus, and you know now graduating to growth equity, what are some of the characteristics of the
Yeah.
company, and then also just the founder that's
Yeah.
driving that?
I think the founders that
Hmm.
I think are most successful in growing their companies are the ones that have humility,
Hmm.
uh, understand that uh, they need to hire um, hire people who can walk with them throughout the
Yeah.
long journey, are committed to company, and people with that kind of expectation will join a
Hmm.
team if they like the leadership.
Sure.
So their ability to hire good people is one thing,
Hmm.
as I think uh, uh, a key thing about making a company successful in the long term. I think the other part is that the founders need to um, accept that they have limitations as well. Certain things
Hmm.
cannot be learned,
Sure.
and they need to be able to delegate or pass the baton to others to fill the leadership roles, such as CEO roles. A lot of times I run into this issue. Like, I founded this company and I'll remain the CEO. And that to me is a bit of a red flag,
Hmm.
unless I'm convinced otherwise. But I mean, there's a perfect example of Google out there, right? Easy example to take home. Founders founded Google, but made a transition to a leader that actually took the company to the next level. They
Sure.
came back and then created a wonderful platform that they later on passed into to the CEO of today that's running Google. Um, that is the other thing. The third thing
Hmm.
is really transparency.
Hmm.
Um, they have to have the courage to communicate what's going on,
Sure.
where the issues are, where the problems are before they become unsolvable. Hiding issues so that they look good on the market or in the media or
Hmm.
in the ecosystem
Sure.
is a terrible trait. We have this culture about, I think, I wouldn't be wrong saying it this way, but we love the stories and we love the good stories. But if there's a challenge that needs to be resolved, that story is also valuable because we can learn from them. And maybe that's the engineer in me. Like, I want to
Hmm.
learn from the failures, right? And
Yeah.
I want to stop failing processes if I could, at least have a chance to do so. But when the issue is at a certain stage where now it's not solvable,
Hmm.
then there's nothing you can do,
Sure.
and that affects employees in the company, that affects
Hmm.
investors, that affects the founders, their reputation as well. A founder who does everything right as much as they can, yet still fails, when they have a new venture, I'll be behind them.
Yeah.
And I'll give them another chance if I could, if I have the resources. But if someone fails because they didn't tell me what's going on, what the problem is, they didn't tell it everyone in the company or the investors, the story the way it is, and they didn't get the support and they failed, that to me is not acceptable.
Hmm.
I it's almost like a marriage, Joel. I think if
Yeah.
you think
Totally
about it,
agree.
if you're not honest with your partner, that's not going to
Hmm.
survive in the long run. You've got to be
Sure.
honest and transparent. But I also don't want to sound like I can solve every problem that comes in front of you. No, I have very limited resources. I have very limited capabilities. I
Hmm.
have very limited talent. I don't want to sound like I'm an answer to everything. All I'm saying is transparency and honesty about what may be an issue allows us to tap into our network and crawl
Hmm.
resources into to focus on a problem which may be solved, and that could lead the company to success in the long run.
Yeah, no, I totally agree. When it comes to building a firm, what advice would you give, emerging fund managers, in terms of
Hmm.
how they should go about thinking through their strategy, and then also, obviously building, engaged relationships with, various types of LPs.
Um, so, strategy, I think clarity is important
Hmm.
and uniqueness is important. Every startup, every GP deck that I see these days have AI in it.
Hmm.
Um, and like in 30 seconds, you can test whether there's actually anything related to AI in it or not, right?
Hmm.
We don't have AI in our deck because we don't develop anything based on AI or have anything developed based on AI that would make and create an advantage for us and our LPs yet, right? Like, why am I talking about it? I understand what it is, how it's going to transform the industries that we're working on, right? That's not what I mean. But like when somebody says that we use AI to do X, Y, Z, I'm like, okay, that's like fashionable thing to say.
Hmm.
So don't do that. Stick to what you believe is a unique strategy and talk about it plainly. Explain the returns plainly. More is not good when you're trying to convince somebody because, like us, as VC investors, they are bombarded with decks
Hmm.
and it's human nature. We only have 24 hours a day. We sleep about 6 to 8 hours of that, work 6 to 8 hours of that. Like, there's only so much we can do. So, you know, go after people who are actually interested in investing in what you're
Hmm.
doing. Don't go to 4,500 family office list that you received from someone. Just focus, do your homework. It
Hmm.
takes time. It's painful, but do your homework. um, I can't, it's not my place to say what strategy is right or wrong. But when it comes to your fellow GP, when it comes to the LPs that you're pursuing, pursue people who you want to develop a relationship with. Not every LP is equal, not every GP is equal. Work with folks that you want to have a long term relationship. That would be my advice.
Yeah, I totally agree. I'd love to hear some trends that you're seeing internationally. So, what are
Sure.
some
Yeah.
observations? What are some
Yeah.
observations that you've seen? Number one, I'd love to
Yeah.
learn about some of the sectors, going deeper on deep tech that you're excited about, what you focused on, and then just the trends.
Yeah.
I've also invested cross border in deep
Yeah.
tech, so I'm just curious to
Gotcha.
hear
Yeah.
some of the learnings that you've had, and I'm happy to chip in on mine too.
Well, love to hear. Absolutely. I'm sure I can learn quite a bit from you in new opportunities as well. Uh, I think uh, I'll only speak to what I am focused on because I don't want to sound like I know other areas, but I believe um, agriculture presents significant opportunities all around the world, especially automation, both indoor and outdoor agriculture, robotics, applications for labor shortages to reduce waste in grow environment, which also is dependent on energy storage solutions to run those robots. Like today, they run about 30, 40 minutes. How can we take it to 8 hours? Drones running pesticide applications, can we run them like 48 hours instead of 20 minutes? Those are things that excites me. And in developing new materials, new battery solutions requires deep research, which is where I believe AI techniques, tools will have an impact, and therefore data centers and the energy solutions related to making data centers possible. I
Hmm.
use that word carefully because it's not possible to put a hyperscale data center to anywhere you want easily. So how can you solve those issues? Those are things that excite me today. What about you? What are you excited about?
So for me, just geographically, right? I would say like in the US, it's been very popular, looking at vertical AI startups. Brain computer interface. I know Meta, has invested in some of those, brain integrated interfaces. I forgot the company. I think it was Shift Control Labs that they acquired, but I think that's going to be a lot more prevalent, in continuing just in the U.S. Right, and then now there's a whole surge of space commercialization. Obviously, we're seeing
I yeah
SpaceX, Blue Origin. So I
yeah.
think the billionaires are all going to later on just build space companies just because they're maybe just they want to do something interesting that's life changing. I mean, obviously in Southeast Asia, quantum supremacy is a big thing. So obviously the in China specifically, right, the University of Science and Technology, there's a lot of research around that, and then autonomous vehicles are going to be really hot. I think there's going to be people, especially in Southeast Asia, that are looking to compete with the robo taxis. A lot of those companies are not going to be playing too well with, they obviously already have not played well with Uber. And now
Mhm.
when Elon launches his robo taxis, there's going to be other companies that are going to be launching their own robo taxis that are going to be more native to their regions. Obviously, in the UK, I would say like AI and privacy, safety are going to be a big thing. And then, I've seen there's a huge leadership with like fusion energy commercialization. So, like when you think about like First Light Fusion or Tokamak Energy, that's a huge thing. And then obviously, hydrogen energy, with our current administration, there's definitely been a pullback, but we've invested in clean tech applications. I'm an investor in a rocket company in India. There's a huge surge right now in India for space tech. And then obviously in Israel, I've seen, a huge um, maturity specifically in cybersecurity, cryptography, and then AI and biotech has been a big thing as well. So those are kind of some of the high level sectors that I've seen geographically focused. I don't know if I missed any or if there's any other
No,
geographic
no, not at all.
you're
Not
interested
at all. Not at all. I think when you think about human beings, there are three
in.
things that matters to stay alive. You can't, in average, you need three. You have 3 minutes to live without oxygen, 3 days without water, and 3 weeks without food. Everything else is optional, right? Your clothes, your house, your car, everything is optional. So to me, uh, transforming agriculture in a way that it's sustainable, affordable,
Hmm.
environmentally friendly, and nutritious is my primary purpose. And that means transforming agriculture, which means transforming energy, which means replacing chemicals. Transforming energy includes fusion, SMRs, but distributed around the world so that the world has access to these technologies. Think of it this way. What's your phone? Is it iPhone, Samsung? Which one
I
do
got
you
an
use?
iPhone. Yeah, I got
Okay,
the like
so
a year old iPhone, but it
okay,
still works pretty
doesn't
well.
matter. If
Hmm.
I give you another $1 billion to put in your pocket, is there a better phone that you can buy?
Yeah, absolutely.
There, which phone you can buy better than iPhone?
Well, I guess you can soup up your iPhone, right? But I guess there's only one
Uh,
iPhone. To your point, right?
exactly,
Yeah.
exactly, and that's the
Mhm.
abundance of technology
Yeah.
that's available to you,
Hmm.
to someone who makes $100,000, fifty
Yeah.
thousand dollar, $20,000, if they could. So my point is making innovation abundantly available across the world elevates life.
Hmm.
In
Yeah.
Kenya, with mobile payments for the last 2 decades or so, people are actually generating decent income. It's not even a smartphone,
Hmm.
right? When it started, like really simple phone. Now it created an economy where there's a middle income that actually is looking forward to do more with the smartphones, right? It's that abundantly available technology that creates wealth, uplifts societies. And I think all the sectors that you mentioned are very important. But what I also
Hmm.
would like to add is that deploying those technologies across the world is important. And that's what Sente
Yeah,
Ventures
I
Fund
totally
has,
agree.
right?
So two pieces on that, right? So there was a company called Tala. They were based in, I think they were based, they went through YC, I believe, or one of the bigger accelerators, but they had a base, I believe, in Africa. And what they did was they would essentially pull a bunch of data from your phone. Most people had Androids back then,
Mhm.
and Androids were easier to come by. People had phones before bank accounts in
Yes,
Africa.
exactly.
So people
Exactly.
could connect their data from their phone and they could get a credit score.
Right.
And then there were small businesses that would be able to actually
Yes.
get money to purchase inventory for the markets, the smaller markets that they have.
Exactly. Or
So
sell
they
their inventory,
sell
right?
their inventory. And then, what's interesting is like just secondary pieces of data that you would never think would indicate credit worthiness. So, like if your phone is charged all the time, if you're more responsible, you always have a charged phone. And my phone's not always charged. I'm on the go. So maybe I wouldn't approve the credit worthiness. But like just based on data, people that have a charged phone seem more sophisticated. They have a higher likelihood of paying on time. That was just data that they collected. So
True.
that's one
True.
piece. But then the other piece is, Elon Musk, obviously there is a whole rumor, and I think it's still in progress, but he was thinking about developing a phone that's connected to Starlight. So I want to know just your reaction to those 2 points. And I know you got to run soon, but any kind of reactions in terms
Yeah.
of like a global mobile phone that connects that anybody can use. And then obviously people being able to get access to funding with other pieces
Yep.
of data without the FICO credit
Yep.
score.
Yep. I think, you know, the comment is not, I'm going to make is not an Elon Musk comment per se,
Hmm.
but anything that allows more people to access um, services or goods that they need to have a decent life that
Hmm.
uplifts the society is good for us. And I think uh, it really comes down to, as I said, like food, energy, and fear is one other thing that
Hmm.
drives us is like a roof over our head.
Sure.
If you can make the basic things abundantly available, environmentally sustainably and affordable and good for our humanity,
Hmm.
I think every initiative deserves a chance to be supported, whether it's a phone that links to Starlink, whether it's a robot that runs 8 hours or 24 hours in a farm orchard to pick up the apples where there is no
Hmm.
labor to do so.
Sure.
That's all good. I'm up for supporting those kind of big ideas. Big ideas got us where we are today. Maybe not always the way we wanted to be here,
Hmm.
but we are here and we can do much better by pursuing those big ideas in a more responsible manner.
Sure. So to wrap up, I know you got to run. If
Okay.
you were to provide one piece of advice, maybe from a mentor or maybe from your career experiences, what would that be to emerging fund managers?
Um, I think having a great partner to
Hmm.
work with is extremely important. A partner who would say comfortably no to you or tell you that you're wrong or telling that you're making a mistake. Um, That's very important.
Sure.
If we assume that we can do everything ourselves, we're wrong. There's this
Hmm.
famous African proverb like, if you want to go fast, go by yourself, run. But if you're going to go far, go with a crowd, right?
Sure.
So that would be my advice. Have a good
Okay.
partner in life, personal life, at work, that you can rely on, trust on, and work a long term together.
Sure. Well, couldn't agree more. And Serhat, thank you for your time.
My pleasure.
I know
Thanks
you're
for
super
having
busy,
me.
so I appreciate you making time for us.
Oh, that's very kind of you. I appreciate it. Thanks for having me. This has been a delight, and talk to you soon again. Take care. Bye
Absolutely.
bye.
Take care. Everybody have a good one. Bye.